The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour and checking everything out right now. And what we got right now, we got the S&P's down 1.75. We got the Nasdaq down 8.5. The Russell's currently up 1.7, so trying to hold on to some positive gains there. We got the Dow down 44 points. Gold's currently up 17 points on the day, with silver up 2.5%. So massive move in silver. We got copper is currently up almost 1.5%. Oil is up 1%. Natural gas is up 1.7%. Corn flying up 20 points. We had the big, annual crop reports and all that stuff come out today, the wage reports. So big moves right there, and not a big surprise whenever that's coming out. We also got soybeans. It's up 11.75, so up 1% on the day. Euro dollar currently at 54 pips. Pound dollar down 11. Aussie dollar's up 88 pips on the day. Euro yen down 43, US yen down 68, pound yen down a full $1.26. Dollar CAD is up 53 pips, with dollar franc down 43 pips. And let's check out some of these charts, pull them up, look across them, see what all we can find. We were talking about, I talked about yesterday, doing the news trades for the ADP NFP report. And I talked about how, 100% of the time over the last couple of years, the euro dollar has moved at least 50 pips off the announcement. And we expect a 100 pip move. We got the full 100 pip move from open to high, 118 from low to high, which is really the full measurement we're, measuring on average, is the low to high. But anyway, so we got that solid 100 pip move, and that gave you a chance for a great trade setup. And let me see here if I can pull up this chart right here. Let's see. Give me a second. I'll open that up for you, and we'll walk through it just step by step, and see what all we can do that we can take advantage. There we go. Found it. All right, that's the one I was looking for. And let me zoom out. Bring this thing down as much as I can, and so we'll zoom out of that, and we'll look at it. Okay. So, there we go. All right, so what we got is you can go over here, and I was talking about this again this morning on the Bull Bear Binary Hour. We were going in, and we had a sell right here at 84. And so if we have a sell at, or sorry, buy, sell at $84. And $100 is the max risk. Okay, so $100 being the max risk or max price on that trade, therefore making our risk, if we sold at 84, the highest it can go is 100. You'll notice on the chart here how it goes up, goes up, goes up, but it stops going up. It even stops quoting because it can't go any higher than 100. What does that mean? If I sell at 84 and it can't go higher than 100, that means my max risk is $16 on the trade. And so we go in and do some easy math here. So I got $16 on my sell side. And my buy side, I buy that for $16. Okay? So that's also $16 max risk on my buy side. Then what I do is I look at combining the two. If I combine the two, I got 16 plus 16. That's a $32 total risk. I want to make $32 on this trade. So when everything's said and done, if I lose on one side, make money on the other, I want to make $32 on the trade. Now, to do that, to net a $32 profit, I need to cover the risk on the other side because I got to assume it's just going to fly up. It's not going to come back. It might come back. If it does, that's bonus. But I want to assume it's not going to come back. So I want to make 32 plus I want to make the risk on the other side. So in both cases, I want to make 32 plus 16. That puts me at $48. Okay? So I need to make $48 on this trade, which basically means it's going to have to hit my strike to do the trade. And so actually it's going to have to exceed it a little bit to be able to make a $48 profit. So if I sold at 84, I got to buy back 48 ticks lower. So if I go over here and I go, okay, well, if I sold at 84, buy back 48 lower. As soon as I get filled on that 84, I'm going to put in a buyback at 36. On this side, if I went in and I bought at 16, I want to sell 48 pips higher. I want to sell at 64. And as you can see, it well exceeded that $64. Easy 1-to-1. The only challenge is going, well, how do I know what strike to pick? Well, I need to look at, one that's close to $25. Okay, maybe a little more, maybe a little less. So maybe $30, maybe $20. Close to, somewhere around the ballpark of $25. And then, if I zoom in on it, we can see that 36.60 is the upper strike and 35.20 is the lower strike. So I go, okay, well, is that within my expected 100 pips up, 100 pips down? And I go, okay, well, 36.60. Yeah, that's within 100 pips. It's actually, and not only that, but it's before a deviation level, so I like that. Okay, and then if I go, well, what was my lower one again? My lower one was 35.20. Let's look at that and go, okay, well, 35.20 is basically the price. I'm expecting it to get to at least that price, if not a little more. So right there, but notice we're below the settlement line. So even though it says 1.5, pretty much right at that deviation level. And that'd mean it'd need to move 100 pips from that point. Let's see here. So it'd need to move, my expectation is that it could move, not needs to move, could move down to 34.80. So that's 40 pips higher. So I expect it to actually not only hit that on both sides, but go further than that on the average. So more often than not. That's why if you have a 1-to-1, okay, and you have a higher probability than 50-50, then that's where you can make money. So if I'm risking 36 to make 36, and I win, say, 70% of the time, I make money. And the way you do that math, it's pretty simple on your risk reward here. Okay, I'm risking 36, and we'll just say, I make money 7 times. So I make $252. And then on the other side, I'm risking 36, and I lose 3 times. So $108. And then my last one, my last piece on here is what's my profit on the trade. And to pull that up, we just basically are going to calculate the difference. Okay, so my difference is 252 minus 108. Now, if I want to get really down to the details, I can calculate in the fees, okay, which are 90 cents a contract aside if it expires in the money or I take profit. So only 90 cents on one side if I have total loss. So on the total loss trades, I had 3 of them times 0.9, so $2.70. And then on the profit trades, I had 7 of them times 1.8, $12.60. Add those two together, I got $15.30. So I come out making 15.3. Take that off, make $128 over a course of 10 trades. Now that could also be $1,028, or you could make that $10,287, whatever. So if you did 10 contracts, it'd be $12.87. If you did 100 contracts, it'd be $12,870. If you so if you get bigger and bigger, obviously that amount can get larger. I just quoted the smallest number to make it simple. But that's just doing the NFP report, which comes out multiple times a year. And so that's, you could have sort of that expectancy as long as it continues to make those moves. And but it worked out really well. And so I wanted to highlight that one for you. Now, what about the other one I talked about? Because I talked about doing a straddle, because that's a strangle. And straddles are the ones I usually actually prefer out of the two. Because the beauty of a straddle, if done correctly, okay, that's a big key, if done correctly, the beauty of a straddle is I can go in and I can usually get out at break even, small loss, small profit, or make money. Okay? Well, the cost on this trade was $36.70 on the short side. So let me reopen my calculators up here, and we'll get that going. Okay? And so right there we go. Okay, I got $30 risk on the short side. Why? Because I sold at $35.70. My ceiling is $3,600. So $3,600 minus $35.70 is $30. Every tick on Nadex on every contract is always worth $1. Okay? So $1 risk. So therefore I have $30 risk on my short one because it can't lose any additional. It can't lose more than $30. It doesn't. I'm not out. If it went up and came back down, I could still make money, but I can't lose more than $30 on the trade. Now, what about the long side? What's my risk? Well, I bought it at 36.20. What's the floor? And so you go in there and go, well, the floor is 3,600, and that might be a little tough to see. But 1.3620 minus the floor of that spread is 1.360. So it's 20, 0.0020. And so I just divide it by 0.01, and, or actually I guess 0.001. But I'm going to have a $20 risk. So now my total risk on the trade combined is $50. Well, remember, how far do we expect it to move on average? We expect it to move 100 pips, but 100% of the time over the last year, it's moved at least 50 pips. So we have a very high probability of breaking even on this trade. Even if it doesn't move the full 100 pips, we got to be able to break even or make something, considering how often it actually does hit 50 pips. We go into that one, and then we go, okay, well, what does that mean I need to make? Well, it's the same secret formula. Total risk plus risk on the other side. So 50 plus, 30, $80 is what I need to make on my long side, okay? And then, 50 plus 20, okay, because I need to make back that $20 I risked on the long. When it goes down, I'm going to assume the long loses if it went down. I need to make 70. And so I go, okay, well, if I need to make 70, well, if I sold it over here at 35.70, that means I'm going to need to buy back, 76 lower. So 1.350 is my buyback price. Well, what about over here? If I bought it at 1.3620, then I need to, buy it back. Remember, I had 50 plus 30 on the side, so 80 ticks higher. So plus 0.080. That's my buy back price. So I need to buy back at 1.370 on the trade. And I go, well, is that within my expected movement on the contract? Well, I expect it to move 100 pips up, and that's going to bring it right up here to 36.97. That's pretty close. It's not quite at 1.37. Now, if you would have left it there, you'd still be fine. You'd still be up because the thing went up. It really hasn't pulled back. That's fortunate. But there was a clue, and this is huge. This is so key. We were talking about this morning, is I may go in and I may decide to, as soon as it passes that one deviation level, I'm going to basically tighten up my stop. Meaning, if it starts pulling back, if another bar closes down, I'm out of the trade. And yeah, maybe I only make $70 if it flies up. Or maybe I only make, if I risk 50, then maybe I only make $30. That's okay. I just want to be able to pull the cash out of the market on a consistent basis. All right, stay right there. We'll be right back after this break. We'll talk about how to choose which one to do.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so welcome on back to the Diagnostic Trading Hour. There in the last segment, we just went over looking at, basically the spreads and the binaries and how to put them together. And I'm just sort of watching right now. I'm looking for any potential trade setups. I like to do that if we can. Every once in a while, throw some trades on live while we're in here. But anyway, so we're looking at the markets right now and going through everything. But I want to go back to the topic of how do I know whether to choose a strangle or on binaries, where I buy an upper one, I sell a lower one, or a straddle on spreads, okay, where the floor and the ceiling line up. What method could I possibly choose to do that? And so when you're trying to figure that out, there are a few things that you're going to want to look at. But, one of just how far does it have to go to be profitable? Okay, that's going to be one of your big keys. You just need to be aware of a few things whenever if you chose to do one or the other, be aware of the benefits and weaknesses, I guess you could say, of each one. The benefits of the binary is it's probably going to cost less. All right, so you're going to cost less money, and it is not going to have to move as far. So it's pretty nice benefits. Okay, so again, it's going to cost less money, probably not have to move as far. Now, so if you understand that concept, that that's how that works, then you go, well, okay, well, if it costs less and doesn't have to move as far, why would I want to do it? What's the downside here? Well, the downside is, if you're going to do that, you're going to need to understand that if it does not hit your take profit, or if you don't get out and adjust or whatever, that you will lose the total amount. So even if you're only risking, let's just say $30 instead of $50. Okay, when we did the two examples before with $32 risk on the binary, is $50 risk on the spread. So let's just say, you're only risking $35. If you don't hit your take profit, or you're not able to get out just at the right time, then you're going to lose all $35. Okay? The straddle may cost a little more, may have to move a little further to get that 1-to-1 ratio, but, okay, this is the big key here, but the big edge, the big benefit in doing the trade is if it doesn't move, say, your full 100 pips, it just moves 75, and we said basically we said it had to move as much as 80 pips. So let's say it just moves 60 pips. Well, I'm going to get my $50 back, and I'm going to get $10 more. So I'm still going to make some money, even though it didn't hit my profit target. If it only moves 50 pips, okay, I get all my risk capital back. Well, what if it only moves, 35 pips? Well, if I risk 50, it only moves 35. I'm going to get 15 back. I'm only going to lose, I'm going to get 35 back. I'm only going to lose 15. So I can lose less, and by doing this, even though it has to move further for me to profit. So my probability of hitting my full 1-to-1 is a little lower because it does have to move further, but my probability of taking total loss is much, much lower. So you gotta weigh, the cost there. So, pick your pain. So do you want your pain to be total loss, but more probable because it doesn't have to move as far, or do you want your pain to be, it has to move a little further, may have to put up a little more in, risk capital, but in reality at the end, I'm going to lose less when I lose more often than not. I'm going to break even. I may make a little bit, or I may make my full amount. That's why I prefer the spreads. But if you're going to do the spreads, especially since you have the fact that, it has to move further, even the binaries, you need to take this into account. I always want to look at a couple numbers, okay? One of those numbers is I want to look at, my low to high. You notice how we had a 100-point move from, the announcement to the high, but we actually had a 118-point move from the low to the high off the announcement. Moved up 118 pips, and I'm wanting to move 100. We got up here to, 36.93. I'm about 7 ticks shy of that. I'm past my 100. This thing hesitates at all. I should be looking to get out. It's like, so what? I made 43 instead of $50. That's okay. It hit my one deviation on top of that. So I need to be really cautious and be looking to potentially, take profits and get on out of this trade as quickly as possible, so that way I can protect my profits on the trade. And that's just the big thing that I want you to, learn how to do, is be able to put those pieces together. And I think that's sort of the pieces that people miss. Another really important step is if the numbers come in conflicting. Let's say NFP was really high, so meaning more jobs were added. I'll add that when we get back from the break. Stay right there. This is a really, really important piece. Stay right there. We'll talk about it after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so what do we got going on that we can check out? Now, you can do this, by the way, on euro dollar, pound yen. Euro yen was actually sort of a unique example. I was talking to somebody about that in the den this morning. But let's go through and let's look at them real quick. So we'll pull up pound dollar right here and back that out a little bit. And we expected, 100 pip plus move. We got it. We got 139 pips there. So within less than 2 hours of the announcement, and I mean, it was just a straight up great move. Depending upon if you want to get down to the 1 minutes, we could really get specific. So on the 10-minute bars, you can't see this clearly. But anyway, so right over here. Yeah, so actually it's not up to down. There we go. Let's get it right at 829. Okay, so we got 111, and we expect, like I said, just a little over 100 from high to low. So we got that just in one direction. And we got 136 from, high to low. So those trades obviously worked out very well. You can see I had all the plots on there from the trades earlier this morning. Straddle, strangle, whatever. Should have worked out great for you. We can go over and look at the pound yen. So we're looking at basically the exact same stats. And so if we measure that, we go, okay, well, let's go to 829. Let's go down here to the low. We got 99 pips. And we're also at, right at that's 1.5 deviation level. So it breaks down, it hits that. Now, we already started at below -5. We're basically at the -5 deviation before the news. So I'm okay with that being 1.5, but I'm there. Need to be looking to take profits. You should have taken profit before then anyway. Now, if I go high to low, because we had a big spike, so this is what makes it very difficult to do anywhere else, because the spike would stop you out. But on Nadex, you don't get stopped out of the trade by doing the low risk spreads and binaries. We got a $1.43 in profit, okay, or not profit, but move. So just a massive, massive move right there. Pound yen trade worked out really well for you. Now, euro yen, this one was a little bit interesting. It really flew up. It didn't fly down as far. Still had a 100-pip move. Okay, so if we check this thing out, we go right here. We got to move down to this level, about 67 pips down. And so were the stats wrong? Did it not move the 100 pips? Remember, the stats are high to low. Okay, so right there we're at 97 pips. We moved up 0.5. We moved down 0.5. We're down at the 0.7. We're just about at the 100 pips. It's time to take profit. Maybe you missed out. You could have done the 3 o'clock. I don't know what hour you did, but you had a couple, chances to be able to, get out of this trade. Let me see. I want to just edit this if I can grab one part of it. There we go. But let's say you didn't get out. You saw this thing fly back against you. You're like, oh, man, I should get out of the trade, et cetera, et cetera. Well, it did it again right here. There you go, 94 pips. Okay, take your money. If you're in like the 3 o'clocks, take your money. Okay, 3 times in a row it's hit that level and it hasn't been able to break it. Probably a pretty good indication that it's not going to. So, trade did move, pretty much its expected distance, give or take a few ticks. And again, it's right at that full deviation move too. So take your profit. You should have made something on that trade, if not, most close to 1-to-1. If you would have taken it whenever it hit that level, especially the second. You should have at least the second time. Definitely the third time. No excuse by the third time if you're in the 3 o'clocks. Now, if we go on over to dollar CAD and look at that, we were expecting a pretty big move on dollar CAD because the announcements come out at the exact same time. They have their employment announcement at the same time that we have ours. We got to move up literally right to, it breaks it by a tick right there, okay? And we got 61 pips. Usually we get a much larger move, but we still got a full deviation move. When you get that full deviation move, you're right at that deviation line. We've seen, if you watch the show day after day after day, how it bounces right off of that. But remember, our measurement is not from, and this is, I have to say this 100 times over because every week somebody's like, well, it didn't move 100 ticks. The measurement is not from the pre-release to the high, pre-release to the low. It's from the low to the high. So if it shoots down, we got a movement right there of, 26 pips. We go in, we go, okay, low to high. We got about 88 pips. So, I'm just sort of, I'm not getting right down to the exact tick, but 86 to, 90 pips. With that right there, we're nearly at our 100 pips. Remember, it's an average, which means sometimes it's going to hit 80. Sometimes it's going to hit 70. Sometimes it's going to hit 110. Sometimes it's going to hit 120. So I've literally seen it move a full, 2-3 deviations off of this news. So it can move massive. But you need to be aware of it's an average. It's a low to high average. And that trade should work out well for you. If you did not get out of that trade right there, which fortunately for you, it expired pretty much right there at 9 o'clock, right up at that point. But you had a second chance if you had the 10 o'clock. Okay? That should be your clue. Okay? There's only, a few % chance it's actually going to expire above a 2 deviation level. So your probability is so high that it's just not going to keep going. You should be taking off your money. You had 2 chances. So if you had the 10 o'clock expiration, if you had the 3 o'clock expiration, you had 2 chances to get out of that trade. You should have made something. I don't know if you would have made the full amount, but you should have made something on the trade. And don't be greedy. If you're up, and do what the chart says. Don't do what your P&L says. I think one of the biggest mistakes we can make as traders is we look at that P&L, and we let that choose if we're going to get out. Oh, if it moves 10 more if I can just make $10 more, because I risk 50 and I'm up 40. If I just got to make $10 more, I'll get out. And then all of a sudden you end up losing it all. The thing falls all the way back down. Okay? Don't base your trades on your P&L. Put your system in place based on your P&L. Put your system in place based on your risk reward. Put your system in place based on your probability. But when it comes right down to brass tacks, and this thing's live, open, and going, Your money's on the line. Your P&L doesn't affect that chart. It doesn't make it go 10 more ticks higher because that's what you need. Okay? Look at it. 2 deviation levels. Done. 88 pips. You know what? That makes sense that if my average moves about, say it's around 100 pips, that I could have some 88s and I could have some 110s. So just, keep all those different pieces, together in your mind. This does take some practice. This is one of the best ones to do it on because it's consistently a very, very volatile instrument. And, the dollar CAD, our expected move on the dollar CAD on this report was actually 80 pips. It wasn't 100. Like euro dollar, that one in pound dollar, dollar franc, all those we were looking for 100 pips. The dollar CAD, we were looking for 80. We got 88 from low to high. If you were only measuring open to high, then you're sitting there and waiting on 20 more ticks to, pop up. But if you go, hey, it went down, it's flying up now. Okay, now my long side's winning. You need to, grab a ruler or a tool or pull out a calculator and do the math between the low and, wherever you're at right now and track that. So that way you can know, hey, have I hit my 80 pips? Because you knew that you hit your 80 pips, your expected average, a little bit lower, like right down there. And then it hit that 2 deviation level, you better get out. It comes back down, you're grading your decision, it flies back up. No excuses. Time to get out. All right, so now we have one other currency pair to check out on this same trade. We got the dollar franc. So over here on the dollar franc, what we're looking at is we got to move down, solid move down to 1 deviation. Let's see what kind of move we got on the trade. And if we go in, like pre-announcement here, like right out of the gate, we've got about 58 pips. But if we measure out of the gate to the low within 2 hours, we got 77. And if we measure the high to the low, we got 86. Now, I think this is the one that did not move it. The last couple times it seems to have not moved it. But the one that did not move it that has, consistently in the past broke 100 pips. Either way, I'm out of 1 deviation. I moved a full deviation. And that's your biggest clue. I moved that full deviation. I should be looking basically at this chart right here. I'm on the 1-minute bars on news. I flip over to 1-minute bars. And I should just be trailing this thing down with every single bar until it goes against me. Because I'm at a deviation. Yeah, you know what? I may get out. Now, I may be at a 1-to-1 already. Okay, because you may have your 1-to-1 on the trade like right up here, at a higher level. So you may not need it to go all the way down. You may only need it to go here to get your 1-to-1. But let's say if you did need it to go further, you did need it to go, 100 pips, which would be really pushing the trade, because I usually don't want the trade to have to move the full average range to get it. Then it doesn't matter. You're at 1 deviation. Trail that stop minute by minute and, get out of the trade quickly. But either way, on that one, with your risk reward, you should have been fine, and you should have made your 1-to-1 as well. It moved a sufficient distance. So that's the summary, really, on how to trade the NFP report, how to trade the unemployment report, how to trade the U.S. CAD, employment change report, and their unemployment report. And it's a great one. Hopefully you'll be able to do it. Now, we also had some other big movers today. We had our ags at noon. Now, they're expensive, so they're hard to go in and actually trade because there's so much implied volatility. So as big as the move looks, it's a tough move. It's very, very factored in. But we can go in and check out corn, almost a 3 deviation move. Honestly, I'm not surprised. We had our annual report come out, and I appreciate a trader saying, hey, by the way, make sure we cover these. So he helped me get the list together and all that stuff, so I added all those on my calendar for the rest of the year. But we got the wage crop report, we got the annual production, crop report, all coming out at once. Insanely massive move. So how can I know how far, what could have happened? Well, let's check out a couple things. One, let's look at, where were we at pre-news? So the news comes out at noon. We were over here at 4:07. Now, there's only a few contracts on the spreads to even build a trade. So let's just pull them up. The spreads, corn, 215. We got basically a 410 right there, and a 410 floor and ceiling. The reason I'm opening this up is because what we're going to do is we're going to go to Quick Chart. This is a very good learning tool for you. Okay, if you learn to use this. So we got that chart. And then we have another chart right over here. We're going to open the lower one. And again, it was a massive, I mean, there's a lot of implied volatility. There also was going to be some real value built into this chart. So whenever we do it. So we'll go over here. And now let's calculate what our risk is on the trade and if we would have made a profit. Because one of the most important steps of doing these news trades, whether it be this trade or some other trade, is just knowing, does my risk even make sense as far as how far it has to move? Well, this one was out of the money because the market was already above it. It was up like at, what do we say? Let's go back over here real quick. Let's see, at 12 o'clock, we were at about 407. Okay? So what we got to do is we got to go to 12 o'clock, right here. At 407, so we're a little bit in the money, and we're pretty much on par where the market's at, right there at 407. Okay? What happened was when it shot off, it just took off so fast, it just went to max value instantly. That's why you don't see really any quotes on there. But we go, okay, 410, we'll just say minus, it's like at noon, we're right around 407, we'll say 0.5. Okay? 407.5. And then we, that's 25 ticks, so $25 risk on the trade. So remember, every tick on every spread, no matter what the market is, it makes it really simple. It's not like futures where you got to figure out 100 different tick sizes and values. We got that. Now on this side, what was our risk at about 12 o'clock? So right here, you can see now we have to get in before 12, actually. So, I made that mistake. Yep, so we'll just say 11:50. Let me change that up. So 11:50, because I had to get in before 12 o'clock. Otherwise, you can't trade the news trade after the news trade comes out. So we'll say 408. We'll say 408.5. So 410 minus 408.5. So we got a $15 risk on that trade, and that's a little better. And then we go over here, and the last quote we got here, right before the news, that's even on this spread is 411.6. So we go, what's 411.6 minus 410? It's only a $16 risk on the trade. So I only have a combined total of a $31 risk. It only has to move 3 points up or down for me to profit on this trade. That's pretty fantastic. Okay? You go on this trade, you're only risking $31, and that's on the wage report with the annual crop production report. It's going to move more than a few points. Definitely a trade that you could take advantage of. And so like I said, really, really good. And if there's things we can do to get even more accurate when we're back testing. So let me just go ahead and do some of those. And so, learn a couple tips and tricks. One is, I probably didn't have this on here. Okay, I am selling this contract. So technically, I need to put it at the bid, right? So when I put it at the bid, that obviously can change up my P&L a little bit. Over here, I'm buying this. I need to make sure it is at the ask. Okay. So on this one right here, like I said, if we got in, we'll make it the same time. I mean, really, there weren't really anybody putting on trades before that. But we got 411.6. So we got $16 on this side. And we got in at, I'll do it when we get back from this break. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so what we can see over here, I went in, I did the bid and the ask. I did change it a little bit. Basically, I ended up with a $40 risk trade. Not bad at all. I mean, that's only a 4-point move on corn. Okay, again, ag report and wage report coming out same time. And it's pretty interesting. Even the deviation levels, I mean, we called the full deviation move. It went up to right up to 3 deviations. But even a full deviation was only in at 7. So there really wasn't accurate. I mean, you could say it's accurate because it was at 3 deviations, but, I mean, that implied volatility should have been a lot higher. Those should have been a lot more expensive, given the report that was coming out. And since it wasn't, great straddle. Now, if it was a lot higher, that's where you might have looked to do like an inverted straddle or something like that. But, just a fantastic trade that, blew it out of the sky. If I got one on that cheap, I wish I would have traded this report. I'm upset I didn't trade this report this morning. Or this afternoon here. If I would have got in on that, I don't think I honestly would have went for a 1-to-1. And here's why. Simply because it's 4 points. And I expect a very large move. I'm expecting this thing to, go up a solid, 10 to 20 points. And we got more than that on the trade. Let's see, what do we get? We got 26 points on the trade. So, just something for you to, be thinking about, be considering, next time that report comes out, have your eye on that one. And, it may be able to, be another good trade to add into it, and add into your basket there. And the reason I bring all this up is because, you want to have, an arsenal of trades, not just a trade. You want to have a playbook. And consider yourself as somebody who's trying to manage that playbook. And you're the coach, the money, that your dollars are your players. You're directing them where to go. So what play are you going to have them do? You can have them do a Hail Mary. You're going to have them, go in and, try to sneak the ball. You're going to do a field goal. You can do a short pass. You're going to run. What are you going to do? And so you have these different plays. You don't have to master everything at once. Obviously, if you try to master 20 plays at once, you won't be good at any of them. But master play, get it down, go on to the next play, add that one on, and just start keeping this book. And you go, okay, well, Waves didn't come out that often, but when it does, I'm going to be checking out this report. And go back and look. Okay, this is it's pretty simple. Go back and look at the last, 12 times that report came out. It may take you a little time, but is it worth it if it's your money? At $40, probably not. But if you're doing 400, 4,000, yeah, definitely worth it. So go back and look and see how far does it move. And then see what the risk is and go, oh my gosh, I can't believe that's only $40. Yeah, hands down, give it to me. Okay? So, and clean up. So clean up on the trade. And, if you went in and put this on for a $4 risk, then basically at 414 your break even. We're up at 429. That puts us up 15 points. We're up $150 on $4. That's a 300% amount that we'd be up. That's right now. That's not selling at the high. That's just right now. So, pretty sweet. You got to separate out a little bit of bid ask, on each side. We're looking at selling at the bid, buying at the ask, but you got to flip your charts around. Again, if you want to get real detailed, you go in and go, okay, well, this one I know I lost everything on, so it doesn't really matter. Because that's okay, because just go up or down. This one, then I go, okay, well, what's the bid? So what's the highest price it could have got out? That way you can sort of see where it could have got out. Well, it could have got out at 428. Well, again, 414 is my break even. Could have got out at 428 or even higher than 428. Then 414, 428. We got a solid 14 points. Still 14 points on $4. That's still 300%. So even with the bid-ask spread built in. So that's one of the things I tell people too. It's don't get all caught up and worrying and whining about the bid-ask spread. These are options. They're going to have a wider bid-ask spread just due to their nature, due to how the market makers have to hedge off their risk. Just look at, is it a good trade for you? So if it hits that expected move, is that a good trade for you? If it is, bid-ask spread it's not what's going to make or break you. Okay? If you're scalping, yeah. Beyond that, no. All right, stay there. Be right back after this break.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.